There are 5 bills that millions of Canadian seniors over the age of 65 are paying every single month that they are completely and legally not required to pay in full, or in some cases, not required to pay at all. 5 bills. And before you decide this list is not for you, I want to say something clearly. These programs exist at every income level. Some have no income test at all. Others have thresholds that are far more generous than most seniors assume. And the one that matters most, the one I am going to save for last, is being missed by an extraordinary number of Canadians who have every right to receive it. My name is Susan Harper. I have spent 14 years as a certified retirement planner helping Canadian seniors understand what the government owes them. And the pattern I see more consistently than any other is this: real money sitting unclaimed. Programs designed specifically for people over 65 going unused because the system does not come looking for you. You have to know it exists. Let us go through every one. Bill number 1, your prescription drug costs. If you are 65 or older and you live in Ontario, you are automatically enrolled in the Ontario Drug Benefit Program on the first day of the month after your 65th birthday. The Ontario Drug Benefit covers most of the costs of over 5,900 prescription drug products on the provincial formulary. You did not have to apply. You did not have to do anything. The province enrolled you automatically through OHIP. What most seniors do not know is that their out-of-pocket costs under the Ontario Drug Benefit are significantly lower than what they were paying before 65. And for lower-income seniors, they can be reduced to almost nothing. The standard arrangement under the Ontario Drug Benefit involves a $100 annual deductible and a copayment of up to $6.11 per prescription after the deductible is met. For a senior filling 10 prescriptions per year, the total annual cost is approximately $161. Compare that to what the same medications would cost without the Ontario Drug Benefit, and the saving is often several hundred to several $1,000s per year. But here is the piece that most seniors on modest incomes have never been told. If you receive the Guaranteed Income Supplement from the federal government, your Ontario Drug Benefit copayment drops to $2 per prescription, and your annual deductible is waived entirely. Your annual prescription drug costs become approximately $20 to $40 per year, regardless of how many medications you take. This reduction to $2 per prescription is not automatic beyond your enrollment in the Ontario Drug Benefit itself. You need to apply for the Seniors Copayment Program by contacting Service Ontario and confirming you receive GIS. If you receive GIS and have not applied for the reduced copayment, you have been overpaying for your prescriptions. And if a medication your doctor has prescribed is not on the Ontario formulary, your doctor can request a special authorization from the Ministry of Health. Many seniors are paying full price for a medication because they did not know the special authorization process exists. Ask your pharmacist whether any of your current medications require a special authorization and whether one has been filed. British Columbia, Alberta, Manitoba, Saskatchewan, and most other provinces have equivalent provincial drug plans for seniors with similar structures and similar opportunities for reduced costs that go unclaimed. Check your province's drug benefit program to confirm you are enrolled and that you are receiving the lowest copayment available based on your income. That is bill number 1. Bill number 2, your dental bills. Before January 2024, dental care was one of the largest uninsured health expenses for Canadian seniors without private coverage. A dental checkup, cleaning, and basic treatment could cost several $100s out of pocket every year. For seniors without employer benefits, the full cost came directly from retirement savings. The Canadian Dental Care Plan changed this. The plan provides dental coverage to eligible Canadians who do not have access to private dental insurance. For seniors 65 and older, the income threshold for eligibility is adjusted family net income below $90,000. At that income level, you qualify for coverage of preventive care, including checkups and cleaning, and restorative care, including fillings and extractions. The cost-sharing structure works as follows. Seniors with family income below $70,000 pay nothing. Between $70,000 and $80,000, the copayment is 40% of the government's approved fee. Between $80,000 and $90,000, the copayment is 60%. For a senior with family income below $70,000 who previously paid $400 to $600 per year for basic dental care, the Canadian Dental Care Plan eliminates that cost entirely. For those between $70,000 and $80,000, the government covers 60% of their dental costs. You apply through Service Canada online at Canada.ca by calling 1-833-537-4342 or by visiting a Service Canada Centre. Coverage is provided through Sun Life Financial as the plan administrator. Once enrolled, you receive a member card and access dental care through any participating dentist. If you have private dental insurance, you do not qualify for the Canadian Dental Care Plan. But if you retired and lost your employer dental coverage, or if you never had private dental coverage, the plan is worth applying for immediately. The application takes approximately 20 minutes. That is bill number 2. Bill number 3, your property tax bill. Every province in Canada offers some form of property tax relief for senior homeowners, and the programs are more generous than most people assume. Let me give you the specific details for the largest provinces. In Ontario, the Senior Homeowners Property Tax Grant provides up to $500 annually to eligible senior homeowners. You claim it by filing the on-ben form with your income tax return. The grant is available to homeowners 64 or older by December 31st of the prior tax year, with adjusted net income below $50,000 for a single senior or $60,000 for a couple. The application is part of your annual tax return. Ontario also has the Ontario Energy and Property Tax Credit, which provides up to $1,485 per year to lower-income seniors to help with energy costs and property tax. This is also claimed on the on-ben form with your tax return. Several Ontario municipalities, including Toronto, Ottawa, and others, also allow low-income senior homeowners to defer property tax payments until the home is sold. The deferred taxes accumulate as a lien on the property with a modest interest rate. This program allows a senior on a fixed income to stay in their home without the annual cash pressure of a property tax bill. In British Columbia, the Property Tax Deferment Program allows homeowners 55 or older to defer all or part of their annual property taxes. The deferred amount accrues at a simple interest rate of 1% per year, significantly below market rates. The program is available regardless of income. There is no income test. Age 55 and homeownership are the only requirements. In Alberta, the Seniors Property Tax Deferral Program provides a low-interest loan to cover property taxes for seniors 65 or older who meet income requirements. The program allows seniors to defer taxes and repay when the property is sold or transferred. In all provinces, property tax relief for seniors goes dramatically unclaimed because most seniors either do not know the programs exist or assume they earn too much to qualify. The income thresholds in most provincial programs are set at levels that include a significant portion of retired Canadians. File your annual tax return. That is the key action for most property tax relief programs. Many of them flow automatically through the tax system once you have filed. For deferral programs, contact your provincial government directly. That is bill number 3. Bill number 4, your OAS clawback, money you should be keeping. This one is different from the other 4 because it is not a bill you pay to a third party. It is money that the federal government quietly takes back from your old age security pension if your income exceeds a threshold, and it is money that many seniors could keep with the right planning. The OAS recovery tax, commonly called the clawback, reduces your OAS pension by 15 cents for every dollar of net world income above $85,323 in 2026. If your income reaches approximately $154,708, your OAS is eliminated entirely. Now, the majority of Canadian seniors do not earn above $85,000 and are not affected by the clawback at all. But for seniors with RRIF withdrawals, investment income, rental income, or capital gains from property sales, the clawback can reduce or eliminate OAS in any given year. Here is the planning opportunity. The OAS clawback is calculated based on your net income in the tax year. There are legitimate strategies that reduce net income and preserve OAS. Pension income splitting with a spouse can divide income more evenly and keep each partner below the clawback threshold. TFSA withdrawals do not count as income for OAS purposes. Shifting income between tax years can keep any single year's income below the threshold. And the timing of RRIF withdrawals can be managed to stay under the clawback level in years when other income is lower. A senior who does a full RRIF meltdown in a single year and loses the entire OAS clawback amount may have been able to spread those withdrawals across several years at a lower tax cost with OAS preserved. The planning is not complicated, but it requires running the numbers before you make large withdrawals. If you are 65 or older with income above $70,000, reviewing your income sources and withdrawal strategy with a tax professional before the end of each calendar year is worth the cost of the conversation. That is Bill number 4. Bill number 5, the GIS, the most consistently unclaimed benefit in Canada. The Guaranteed Income Supplement is a non-taxable monthly payment added to your OAS for low-income seniors. For 2026, the maximum monthly GIS for a single senior is $1,108.74. For a couple where both receive OAS, the combined additional GIS is $1,334.82 per month. This money is tax-free. It does not affect your OAS. It does not affect your provincial benefits. It flows directly into your bank account every month alongside your OAS payment. The income threshold for full GIS in 2026 is approximately $22,300 for a single senior. The benefit begins to reduce above that threshold and phases out completely at higher income levels. Only OAS, employment income up to $5,000, and other specific income sources are excluded from the GIS income calculation. Your TFSA withdrawals, your principal residence proceeds, and many other common senior income sources do not count against GIS eligibility. Here is the number that should matter to every senior watching this. According to Employment and Social Development Canada, approximately 200,000 eligible Canadian seniors are not receiving GIS. 200,000 people who qualify for a tax-free monthly payment of up to $1,108 are not receiving it. The most common reason is that they have not filed a tax return for the year in question, because GIS eligibility is determined from your annual tax return. Even if you owe no tax, you must file a return for the government to calculate your GIS entitlement. If your income is modest and you are not currently receiving GIS alongside your OAS, there are two things to check. First, confirm you have filed your income tax return for the most recent tax year. If you have not filed because you thought you did not need to, file immediately. The GIS cannot be paid without a current tax return on file. Second, if you have filed and are still not receiving GIS, call Service Canada at 1-800-277-9914 and ask specifically whether your GIS has been assessed and whether you are entitled to receive it. GIS can be paid retroactively for up to 11 months before the date you applied, but not further back than that. Every month you delay is a month of potential tax-free income permanently lost. GIS is also a gateway benefit. When you receive GIS, you automatically qualify for reduced provincial drug plan copayments in most provinces, including the $2 prescription copayment in Ontario I described in Bill number 1. You may qualify for additional provincial income supplements, like the Ontario Gains payment of up to $90 per month, and in some provinces, you receive additional benefits tied specifically to GIS receipt. The principle that connects all 5 of these bills is the same one I see in my practice every day. The Canadian government has created programs specifically designed to support seniors in retirement. Most of them require you to file your tax return annually. Most of them require you to apply or confirm your eligibility. None of them find you on their own. File your taxes every year, even if you owe nothing. Apply for the Canadian Dental Care Plan if you have no private dental coverage. Confirm your provincial drug plan copayment rate matches your income. Check your province's property tax relief programs. And if your income is modest and you are not receiving GIS, call Service Canada this week. Send this video to one person in your life who is 65 or older and who you suspect has not recently reviewed whether they are receiving everything they are entitled to. The GIS conversation alone is worth having. For someone who qualifies and is not receiving it, the annual value is over $13,000, tax-free. I will see you in the next one. Let me go deeper on each of the 5 bills because the overview gets you started, but the details are where the money actually is. On bill number 1, prescription drugs, I want to address a situation that affects a significant number of seniors who move to Ontario from another province after age 65 or who recently became eligible for a provincial drug plan for the first time. The Ontario Drug Benefit Enrollment is tied to your OHIP card. If you have a valid Ontario OHIP card and you are 65 or older, you are enrolled. But if you move to Ontario from another province, there can be a waiting period before OHIP coverage begins. During that waiting period, your previous province's drug plan may still cover you, or there may be a gap. Understanding the transition timeline before you move is important. Call Service Ontario before you move to clarify your exact coverage start date. For seniors in other provinces, the equivalent programs are as follows. In British Columbia, the Fair Pharmacare program provides income-based assistance with prescription costs. In Alberta, the Alberta Seniors Benefit includes a dental and optical assistance component. In Quebec, the Régie de l'Assurance Maladie du Québec provides prescription drug coverage to seniors through the public plan. Saskatchewan, Manitoba, New Brunswick, Nova Scotia, Prince Edward Island, and Newfoundland all have provincial drug programs for seniors with varying eligibility criteria. The key action in every province is to confirm you are enrolled in the provincial drug plan and that your copayment reflects your current income level. Drug plan copayments in most provinces are income tested. If your income has decreased since you enrolled, your copayment may be higher than it should be. You may need to notify your province of the income change to have your copayment reduced. On bill number 2, the Canadian Dental Care Plan, I want to address the transition for seniors who recently retired and lost employer dental coverage. When you retire and lose employer dental coverage, there is a window during which you may be eligible to apply for the Canadian Dental Care Plan without a waiting period. The plan is specifically designed for people without access to private dental insurance, and losing employer coverage due to retirement qualifies you to apply immediately. The application process requires you to confirm you do not have private dental insurance and to provide your social insurance number and your most recent tax return information. Service Canada uses your tax return to confirm your adjusted family net income and to determine your cost-sharing tier. This is another reason why filing your annual tax return is critical, even if you owe no tax. Once enrolled, you receive a welcome package from Sun Life Financial with your member card and information about how to use the plan. You present your member card at any participating dentist. For a senior without previous dental coverage who has been avoiding dental care due to cost, the Canadian Dental Care Plan represents a significant and immediate change in what is accessible. On bill number 3, property tax, I want to spend additional time on the Ontario Trillium benefit because this is the program that most Ontario seniors have the most confusion about. The Ontario Trillium benefit is actually 3 separate credits combined into one payment. The Ontario Energy and Property Tax Credit, the Northern Ontario Energy Credit for residents of Northern Ontario, and the Ontario Sales Tax Credit. For seniors, the most significant component is the Ontario Energy and Property Tax Credit. The credit is calculated based on your property tax paid or rent paid, your energy costs, and your income. The maximum credit for a senior in 2026 is approximately $1,485. This credit is paid monthly, starting in July and running through June of the following year, based on your prior year tax return. For a senior paying $1,500 per year in property tax, the credit can cover essentially the entire amount. The critical action is to complete the on-ben form when filing your annual tax return. This is the application form for both the Ontario Trillium benefit and the Ontario Senior Homeowners Property Tax Grant. Many seniors file their taxes using software that should automatically prompt them to complete the ON-BEN form. But if you use a basic version of tax software, or if your return is prepared by someone who does not specialize in senior returns, the on-ben form is sometimes skipped. If you have been filing your taxes in Ontario and have not been receiving Trillium benefit payments, it is likely that the ON-BEN form was not included with your return. You can file an adjustment to your prior year return to add the form and receive the credit retroactively for up to 10 years under the Taxpayer Relief Program. On Bill number 4, the OAS Clawback, I want to address the specific situation of seniors who sold a home or received a large one-time payment in a single tax year. The OAS Clawback is calculated based on your net income in the tax year. For most seniors, income is relatively stable from year to year, but a home sale, an RRSP withdrawal, a large inheritance, or a one-time capital gain can push income well above the clawback threshold in a single year and result in OAS being clawed back for the following year. When this happens, the OAS clawback for the following year is calculated based on the elevated income in the prior year. The good news is that the clawback is recalculated every year based on your current year income. A senior whose income was temporarily elevated by a home sale will see their OAS clawback removed the following year when income returns to normal. But the administrative process for managing this requires filing your tax return accurately and on time. CRA calculates the clawback automatically based on your return. If your income in the prior year was above the threshold, CRA will reduce your OAS payments in the following July, after your return has been assessed. If your income is normally below the threshold, but a one-time event pushed it above, you can contact Service Canada proactively after filing your return to confirm the adjustment will be applied correctly for the following year. On Bill number 5, GIS, I want to address the most common barriers that prevent eligible seniors from receiving it. The first barrier is not filing a tax return. GIS eligibility is assessed from your annual tax return. If you do not file, CRA cannot calculate your GIS entitlement. Many seniors with very low income assume they do not need to file because they have no tax owing. They are correct that they owe no tax. But without the return on file, they also cannot receive GIS, Provincial Drug Plan Copayment Reductions, GST/HST credits, or the Ontario Trillium benefit. Every year without a tax return is a year of multiple benefits permanently lost. Community Volunteer Income Tax Program clinics operate across Canada from February through April each year, offering free tax preparation for seniors with modest income. These are run by CRA-trained volunteers. For a senior who has stopped filing because they thought it was unnecessary, a single CVITP appointment resolves the problem and triggers all the benefits that flow through the tax system simultaneously. Find your nearest CVITP location at Canada.ca or by calling the CRA at 1-800-959-8281. The second barrier is not knowing the income calculation. Many seniors who receive some employment income, pension income, or investment income assume their total income puts them above the GIS threshold. The GIS income calculation excludes OAS itself. It excludes the first $5,000 of employment income. It excludes TFSA withdrawals. It excludes principal residence proceeds. For a senior whose income consists primarily of a small CPP pension and modest investment income, the GIS calculation may produce a lower number than expected, and eligibility may be higher than assumed. If you are uncertain whether you qualify for GIS, call Service Canada at 1-800-277-9914. They can run a preliminary assessment of your eligibility based on the information you provide over the phone before you file. The third barrier is not applying when first eligible. Most seniors are automatically enrolled in OAS when they turn 65 and receive a letter from Service Canada approximately 6 months before their 65th birthday. GIS is often included in the initial OAS application for lower-income seniors. But if your income at the time you first applied for OAS was above the GIS threshold and has since decreased, you may now be eligible and not receiving GIS. Income changes due to retirement, the death of a spouse, or reduced investment income can create new GIS eligibility for seniors who were previously above the threshold. Review your current income against the GIS threshold every year. If your income has decreased below approximately $22,300 as a single senior, contact Service Canada to apply. The 5 bills I described today represent thousands of dollars per year for many Canadian seniors. Prescription drug costs reduced to almost nothing. Dental care covered for income below $90,000. Property tax credits and deferrals. OAS preserved through smart income management, and GIS of up to $13,000 per year tax-free for eligible low-income seniors. Every one of these programs was created specifically for you. Every one requires you to take an action to claim it, and none of them will find you on their own. I will see you in the next one.